I got so much motherfucking design on right now.
Break it down, bring it back, make it clap. I got 3 old thoughts, new guap, wear that thing. Bitches on my line, and you know.
Years-to-years changes is a method of comparing financial from one period to the same period in the previous year. It helps evaluate the percentage change in key percentage change in a key performance indicator. It provides insight into the trends and directions of a company performance by highlighting the magnitude and direction of changes in key areas. From the company its Exxonmobil balance sheet, it showed that total asset in 2022 increased by 8.89%, 1.86% in 2021, and negative 8.23% in 2020. It is because business expansion and often invest in expanding their operations such as acquiring new facilities. But total liabilities also slightly increased by 2.05% in 2022, negative 3.19% in 2021, and 3.03% in 2020. It it may be because company takes on additional debt through loans or bond. It will increase its liabilities. The common size analysis is financial analysis technique used to evaluate the relative importance of different line items on a company's financial statement. It helps highlight the relative importance of various components within the financial statement. Based on the ExxonMobil component size analysis for financial, for the past 3 years, cash and cash equivalents slightly increased, which is 8.03% in 2020. 2.01% in 2021 and 1.31% in 2020. Company use its cash to repay debt obligation. It can result in a decrease in liabilities and increase in cash and cash equivalent. Analysis is used to evaluate changes in financial data over time. It involves selecting a base year to identify trend and asset performance. For ExxonMobil trend analysis, we set 2019 as the best year. In the analysis, it showed that the company financial performance has been improved over the analysis period. It showed that the revenue has been increased for 3 years, which is 156.14% in 2022, 108.26% in 2021, and 68.51% in 2020. It is because of expansion into new market. When company expand into new market, it can help that into additional customer segment, and it will increase sales and revenue.
Assalamualaikum. Today we will be discussing ExxonMobil's financial ratios for the years 2021 and 2022. These ratios provide valuable insights into the company's liquidity, efficiency, and ability to meet short-term obligations. The current ratio for ExxonMobil in 2021 was 1.04, indicating that the company's current assets slightly exceeded its current liabilities. Although this ratio is above 1, it hovers near the threshold, suggesting a reasonably tight liquidity position. However, in 2022, the current ratio improved significantly to 1.41, indicating that ExxonMobil's current assets expanded considerably, providing a greater capacity to meet short-term obligations. A higher current ratio would offer better financial flexibility to the company. In 2022, ExxonMobil reported a net working capital of $2,511 million. While this indicates positive net working capital, the relatively low absolute values suggested a tighter liquidity position and limited room for maneuvering. However, in 2022, the net working capital surged to $28,586 million, signifying a substantial improvement in ExxonMobil's short-term liquidity and operational efficiency. This increase provided the company with a more comfortable cushion of short-term assets to cover its obligation. Turning our attention to quick ratio, we find that in 2021, ExxonMobil had a quick ratio of 0.79. This suggested that the company's current assets were less than its current liabilities, implying a reliance on inventory to meet short-term obligations. However, in 2022, the quick ratio improved to 1.16, indicating an increase in current assets relative to current liabilities. This improvement reflects enhanced liquidity and a stronger ability to meet short-term obligations without relying heavily on inventory. Lastly, let's explore the days to sell inventory ratio. In 2021, Exxonmobil had a days to sell inventory of 233, meaning it took 233 days on average to sell its inventory. This suggested slower inventory turnover and potentially less efficient inventory management or selling challenges. However, in 2022, the days to sell inventory decreased to 210, indicating that Exxonmobil reduced the average time to sell its inventory. This improvement signifies enhanced inventory management, potentially reducing costs and freeing up working capital for other purposes.
Profitability ratio. Profitability ratio are used to assess a company's ability to generate profits and earnings relative to its expenses, investments, and sales. Firstly, gross profit margin ratio in the year 2022 is slightly decreased as compared to gross profit margin ratio in year 2021. This is because the amount of crude oil and product purchases, which is cost of goods sold in 2022, is increased. Next, net profit margin ratio in year 2022 is increased as compared to net profit margin ratio in 2021 due to increase of revenues and other income. Operating profit margin ratio in 2022 is decreased minimally by 3.89% as compared to operating profit margin ratio in 2021. Then, the return on asset in year 2022 is higher than the return on assets in year 2021 because of the amount of net income attributable to Exxonmobil is increasing by 2 times. Lastly, return on equity in year 2022 is also higher than the return on equity in year 2021 due to increasing in total equity in 2022 by $26,790,000. This indicates the stockholders will receive more profit from their investment. Overall, the profitability ratio for the year 2022 show better improvement compared to the profitability ratio for the year 2021.
Next is efficiency ratio. It is the ratio used to assess the operational efficiency and profitability of a company. Firstly is fixed asset turnover, FATO. The efficiency with which a corporation uses its fixed asset to produce sales is measured by its fixed asset turnover. The formula for FATO is calculated by dividing net sales by the average fixed asset. In 2021, the ratio is 1.0, meaning that the company is effectively using its fixed asset to produce revenue, but it is not producing any more than the value of those assets. However, in 2022, the ratio is 1.45. It shows improvement over the previous year. We can state that the business are becoming more effective in using its fixed assets. Next is total asset turnover, TATO. Total asset turnover ratios are a financial measure of the ability of a company to generate sales in relation to total asset. The formula for TATO is calculated by dividing sales by the average total asset. In 2021, the ratio is 0.78, meaning that the company assets are not being used to create sales or that sales volume is low relative to the company asset base. However, in 2022, the ratio is 1.13, an increase from the previous year. The fact that the total ratio increased from prior year suggests that the company has either improved the efficiency of its asset utilization or grown sales volume in relation to its asset base.
Hello, my name is Muhammad Shahmin Adi. I will explain to you guys about the solvency ratio of Exxonmobil. So first thing first, what is solvency ratio? The solvency ratio itself is the financial metric to measure the company abilities to meet the long-term obligations and to sustain the operation in the long run. It assesses then to which company's asset can cover its liabilities. Besides, it also provides insight into company's health, financial stability, and the debt management. So for the first one, we will go through to the debt ratio, defined as ratio of total debt to total asset. In the table, it shows that the debt ratio of Exxonmobil have been increased its total asset, so that the debt ratio will decrease from 2021 to 2022. The comparison between both years shows that companies are still maintaining the efficiency and their debt management, as the revenue and sales tend to increase over the year. Next, for the debt equity ratio, It measures how much debt company has compared to its asset. In phase 2022, the company faced a slight decrease of debt equity ratio. This means that Exxonmobil has full ability to keep the positive result, as it always shows the increase of revenue from year to year. The last one, in the table it shows that the time interest earned ratio also decreased from 112.43 to 78.22. The amount of interest payment made by the corporation will typically decrease if the debt to equity ratio is decreased. In fact, one strategy to reduce their debt will be to provide investors with greater equity in the form of stock. So, from all the findings, the Exxonmobil have 3 financial strengths that can be tell. First one is it provide competitive advantage, which is allow the productive entity to generate more sales or superior margins compared to its market rivals. And the second one, it can balancing the capital expenditure with the dividend payout. Funds are deducted from its retained earnings, and there is no effect on the additional paid-in capital. And the last one is it focus on a high return project, which is can evaluate more potential future project or the health of a project in progress.
Now, we will talk about weakness and recommendation for Exxonmobil. First, 2022 more crude oil and goods were purchased in COGS. It affected gross profit margin decrease in 2022 compared to 2021. Second, income volatility, oil and petrol prices, which can be unpredictable, have a significant impact. Third, Exxonmobil works in a capital-intensive sector that necessitates significant investment in infrastructure, drilling, exploration, and refining facilities. Finally, exposed to geopolitical risks because it operates in a number of nations with diverse political, economic, and regulatory frameworks. For recommendation, Exxonmobil can make diversification the company's revenue stream. Second, cost effectiveness and operational optimization, putting into place cost-cutting strategies, streamlining processes, and enhancing effectiveness. Lastly, risk management. It is essential to establish efficient risk management techniques in order to monitor and address global issues. For the conclusion, Exxonmobil is a company that always grows positively. They always make positive cash flow for their company so that they always can improve their business to be a better company. But there is always room for improvement. I think that's all from me. Thank you.